Okay, so we're going to do a quick recap of what's happened in the market over the last few days. So, what we have, let me just get rid of a couple of these lines. Okay, so the market from the left-hand side of the screen, price came down and then up a little bit, down, up, then down. So we'll just mark on the lows and the highs of the moves. So that was down, 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 then up. So that was the low. Then it went up, up, down. So that was the high of that move. Then it went down, down, up. So that was the low of that move. Up, then down. So that was the high of that move. Down, down, sideways, sideways, up. So that's the lowest point between this up candle and the previous high. So that's there. And then it went up and down. So that's the high of that move. Down, sideways, down, sideways, 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 up. So that's the lowest point of that move before we got our next up candle. Then it went sideways, up, down. That was the high of that move. So down, sideways, up. So that's the low of that move. And as we can see, it moved up. So out of all of this movement down, we can see that this here, from this point here, this was the lowest point of this move, and it went up to this point, then down and made a higher low. Then it came up, and on this candle here, it broke that high. So we've now got a high that's been broken. So this low here came up and made a high, then came down and made a low, and the low was higher than the previous low, so now it's just kind of zigzagging up, and it comes up and breaks this high. That is an entry for a buy signal as long as the 4-hour chart is also in a buy. If we just flick over to the 4-hour chart, we can see that that's actually in a sell the whole way. So this 1-hour chart, this part here, on the 4-hour chart is this little movement here. And the way we can see it's still in a sell on the 4-hour chart. Just get rid of some of these green lines. So if we just take this low here, for example, then the price comes up and then is broken. So because this low was broken, I'll just get rid of some of the other stuff as well. Because that green line was broken, it means our stop loss would go just up here somewhere. It's just above the high of 10 pips above the previous high. So our stop loss would go about there somewhere. So the price comes down, breaks this green line, comes down, makes a new low, comes up and makes a new high just here, but doesn't break our stop loss. If it came up and went higher than this green, or touches the green, we would no longer be in a sell. But because it hasn't, we're still in a sell. And then the price comes down and goes lower. The price here breaks the low of this previous low. So all of this is telling us that it's still in a sell trade. This 4-hour chart is 100% in a sell trade. So if we go back to the 1-hour chart, when we get a buy trade, we don't take it because the 4-hour chart is telling us it's a sell. But what we do enter is if we get a sell trade, because that means the 4-hour chart's in a sell, and then the 1-hour chart confirms that we are also in a sell. So with that little information out the way, we can go back to looking at our 1-hour chart. So if we go back to this low, the price comes up and makes a high, then comes down and makes a low, then comes up and breaks the high, which means we've now got an entry point in a sell, which is the previous low, this one here. So if the price comes down and breaks this previous low by 10 pips, we would enter a sell trade. Cool. So the price comes up, 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 and then makes this down candle right here, which means this is our new high, which means that this is our lowest point between, actually let me just add one more little line in there. We do have a little high here. So the price comes from this point, comes up to this, then makes a down candle, then a sideways candle, then a sideways candle, then a sideways candle. Actually, sorry, this blue one here is an up candle, ever so slightly higher there and higher there. So that means that's our low. Then we've got sideways up, then down. So this candle here is another high. So we've actually got that high at the same price as this high. So it didn't quite break it. Then the price comes down and moves up. So that's our new low. So we'll get rid of those because they're no longer relevant. So this is our most recent low. So 10 pips below that would be our entry for a sell, which is about there, around there somewhere. Then the price comes up, then down, makes a new low, and then moves up, makes a new high, and it breaks our previous high, which was that one there. And when we have a break of the previous high, we move our stop loss to 10 pips below the, which would be about there, 10 pips below the previous low. So stop loss also means entry for a trade in the opposite direction. So I called that a stop loss, but if the price comes down and hits this little green line, we'd actually be in a sell entry. So the price comes up. If the price moves higher again, we would move our stop loss up. But it comes down and breaks this low here. So it hits that point, but hasn't quite come down to trigger our entry. And if we move a little bit further along, there, it hit our entry. And so now we are in a sell trade. So the price turned into a buy, but we didn't take it because the 4-hour chart is in a sell. Then the price wiggled around and then triggered us for a sell trade. Then the price came up, didn't quite hit our stop loss. Then the price comes, made a slightly higher candle, then another higher candle, then a low. So this is our new high. That's our new high. And we've got a break of our low. So we've got a break of our previous low happening here, which means we move our stop loss to 10 pips above the previous high, which is what I've done. That's where that red line is there. That's 10 pips above the high. And this was our entry. So the price has come down, then went sideways, then went down again, then went sideways, then went up, then up again ever so slightly, then up again. Now it's made a down candle. So this is our new high, and this is our most recent low. And I'll have to get rid of some of this extra stuff to make the screen easier to look at. So that was our recent low, and that's our high. If the price comes down and breaks this low, we can move our stop loss 10 pips above the previous high. So price goes sideways, then the price comes down, and you can see it broke it just ever so slightly. So this little dotted line you can see is touching the low, and it's broken it with this price. So now we can move this stop loss down to 10 pips above the previous high, which is there. So the stop loss would move to there, which I can't do at the moment because the share market's actually closed because it's the weekend. But as soon as the share market opens, or the Forex market opens, I'll move my stop loss down to that price. And that's the last candle we've got. So we entered on this candle and the price came against us and then went down in our direction and then made a low, came up, made a high, and it's just broken the low, which means we can move our stop loss to just above the previous high. And that means we've already locked in some profit of this trade. We entered at this point and we are locking in, we're setting our stop loss at this green line. So we're already in profit, and if the price keeps dropping, then we might make more profit. We just see how it goes. That's a little recap.